In a 30-year period, the average investor got only 4% returns. Stock market gave a little bit more than 10% average returns. That means someone investing $500 every single month for that 30 years, well, if they got 4% returns like the average investor did, they would be looking at about $336,000. But if you had just invested in the top 500 companies and never sold your stocks at any given point during that 30-year period, you would be looking at $986,000. Your money would have been almost tripled.
GameStop to the moon, AMC to the moon, all our stocks to the moon, Dogecoin to the moon. That is not a stock though, doesn't matter, to the moon. I feel like I'm JFK, cause I'm headed to the moon.
Welcome to Financialism, where we talk about expanding our wealth growth mindset. Now hit that like button, hit that subscribe button, and let's get started. In this video, we're going to talk about how you can avoid being the average investor with 4 behavioral hacks. The first behavioral hack is knowing how to do nothing. Now, this doesn't mean, okay, he said do nothing, I'm not going to invest, I'm just going to sit back for no. That's not what nothing means in this case. This means that when there is news, you don't react to it. So a lot of times people sell their stocks right before a presidential election, and then more people sell their stocks after a presidential election. Think about it. In the United States, if a Democrat wins, well, Republicans will probably sell off some of their stocks, and vice versa. Republicans and Democrats are no better than each other when it comes to their investing behavior. Money is this objective force that really helps us judge how we're behaving, and it shows that, even though people consider fiscal conservatism to have a lot to do with the Republican Party, it's not like Republicans are better investors than Democrats. And actually, it is more likely that during a Democratic presidency, stocks will perform just a little bit better, but not to anything that actually significantly matters. So it doesn't really matter who's president, Democrat or Republican. Another thing is, it's not just presidential elections. It could be things like, well, the pandemic. People were saying this is an unprecedented event. It's never happened before, except every time the market crashes, it is an unprecedented event, and people panic sell. Don't panic sell. Do nothing. Behavioral hack number 2. Money for investing is like a bar of soap. The more you use it, the more you buy, you sell, and you try to do things with your portfolio and your stocks, the smaller the bar of soap gets. So when it comes to investing, every time you sell a stock, you're paying capital gains taxes. If you are holding your stock for under a year and you sell it, you're going to owe way more money in capital gains tax. Here's how it works. You are earning anywhere between $40,000 and $85,000, which is most people. You're going to be paying 22% on your profit. That means almost a quarter of your profit is going to go to the government, right? So that's that bar of soap getting a little bit smaller. But let's just say you held your stocks for over a year. Well, you're still going to be paying money to the government for your capital gains. And it will be significantly less, but you're still going to be paying. There is an exception if you're buying and selling stocks under a year. You can avoid capital gains tax if you're doing this inside of a Roth IRA. So definitely click that little thing right above right over there if you're interested in how Roth IRAs work. It's a great tax-deferred investing account that you can use. Behavioral hack number 3, never sell during a down market. Think about a different asset class that's not stocks. Think about the home that you're living in. If you bought your home for $300,000 and it starts crashing down to $200,000, what are you going to do? Sell your home? Go live in a hotel until prices, drop a little bit lower so you could buy back in? You're not going to take that risk because you know that there is a large chance that you will probably miss that opportunity of buying the home for lower. If your car starts going down in price, which almost every single car does, except for in 2021, there is an exception where we see cars actually going up in price for one of the first times in history. And I'm not talking about collectibles, I mean regular old cars are going up in price right now. But for the most part, cars tend to go down in value. What are you going to do? Sell it once you drive off the lot knowing that it just went down 10%? No, you're going to hold on and you're going to use it. And what about your kids? You know, sometimes they behave well, sometimes they don't. You're not just going to dump them on the street when they're doing terrible things. So one strategy to help you from selling during a down market is diversification. This means that you're not just invested in a handful of stocks. You're diversified heavily across many different sectors. Maybe you have some technology stocks. Maybe you have some cryptocurrency. Maybe you have some collectibles and some real estate or REITs. You might have some international stocks. You could diversify many different ways. And usually diversification helps bring some balance to your portfolio. So when something goes down, something else goes up. Diversification is based on the principles of correlation, meaning it's not cause and effect, but you know that when the market crashes, something like gold might crash a lot less or even go up. So that gives you a chance to potentially sell a little bit of the gold and buy a little bit more of the stocks. You need a strategy to be able to do that. And that's behavioral hack number 4. Trust the science and create an objective system for investing. For example, my objective system for investing is invest at least half of my income. I'm luckily in a position of privilege where I'm able to do that. Invest at least half of my income, no matter what, every single month, ignoring the news and world events. This strategy has helped me build a portfolio over 6 figures. And by the way, my income from my 9-to-5 jobs has never exceeded 6 figures. Buying stocks every single month is known as dollar cost averaging. This means you take the same amount of money and you invest it every single month. This strategy has performed extremely well over the last few decades. In fact, longer than the last few decades. If you use this strategy for the last century, you would have been buying stocks at great prices when the market crashed. You would have been on the uprides, and no matter what, you would have less than a 0.01% chance to walk away with less money than if you had never invested at all during a 20-year period. Another strategy you can be inclusive of in your objective plan is allowing yourself for rebalancing your portfolio. What this means is you can set a predetermined time period where you will sell off some of your winners, maybe some of your losers, and bring some balance to your portfolio. Maybe have a little bit more cash and, I don't know, go travel the world with it. So one strategy to do that. So one example is every 2 years, you will just look at your portfolio and sell off a certain percentage of stocks that have exceeded your expectations or maybe disappointed you severely. But again, this is not financial advice. Seek a financial professional or do your own research. By the way, before you guys exit out, there is a free code down below, a link to Webull. If you deposit $100, you will be getting 2 free stocks, and these stocks could be up to $1,000+. Definitely check it out. It is always worth it. I collect these freebies. I actually collected over $3,000 in freebies just doing affiliate links like this, and I think it's a win-win for everyone. If you enjoyed this video and you think these financially savvy tools will help you in the future, well then go for it. Remember, I'm not a financial advisor, but I am a board-certified behavior analyst, meaning I know what I'm talking about when it comes to human behavior. All right, with that, peace out.